and sometimes they're managed by an advisor, but you're going to be limited, and your clients are going to be limited to only investing in public market deals. This is something you're going to have to explain to investors because they're not going to understand this. They need to understand that, hey, in order to invest in private market deals, in order to invest in your opportunities, they have to make a move from one firm to another. So they have to move their money from their current IRA company to an equity trust IRA. Now, keep in mind, we want to overcome objections here. This doesn't mean that they're moving their money over to equity trust and they're going to be locked up and they can never move their money outside of equity trust again. It's important to explain to them that with a self-directed IRA, they have the freedom and flexibility to move money whenever they want and as many times as they want. They're not going to be restricted, and once it's in the self-directed IRA, throw away the key. They're going to be able to move money whenever they want. That's really, really important. A self-directed IRA through a firm like Equity Trust allows people to invest in all of these interesting, unique private market investments. Rental properties, fix and flip deals, real estate syndications, land, mortgage notes, trust deeds, private money lending. One of the things that my wife and I do with our self-directed IRAs is we lend money secured by real estate to fix and flippers. These are short-term, 6 to 12-month term loans. It's one of the ways that we keep our money working for us, leveraging compounding interest in the absence of taxation. Private company investments, private equity, private credit funds, online private market platforms, gold and silver, cryptocurrency, cattle contracts, agreements. We've held the most unique alternative private market investments out there. That's what we specialize in as a firm. Your big financial institutions just aren't going to allow people to do that. And so you have to spend some time informing and educating them on how that works. Now, going back to that case study that I mentioned earlier, the deal sponsor that's raised millions of dollars in capital over the last year, over 400 new IRA accounts, they allowed us to come in and spend time talking about this. So we can tell the story. We have the authority as an IRA custodian to be able to tell this story, and you don't have to feel like you got to do all the heavy lifting and tell the story. Allow us to help you through that process. All right, now you're probably thinking, why in the world, if we're trying to promote our opportunities, if we're trying to promote our deals, why in the world would we talk about these other types of unique alternative investments? I'll give you one example here. This is a single family rental property. An investor at Equity Trust, his name is Doug. And Doug, he only had about $13,000 and some change in his Roth IRA. That was all he had in his Roth IRA to get started with. He's in his early 50s. He fixes and flips properties. He's a real estate agent in the Dayton, Ohio market. And he had an investor friend who had capital. So we had a guy who had a deal and an opportunity, and we had somebody with IRA money that he wanted to invest, that he wanted to start working for him. So he partnered his Roth IRA with his investor buddy, call him his financial friend. We like to use that term a lot in our industry, financial friend. So investor A, Doug, partnered with investor B, who was the financial friend. Investor A, Doug, is the one who found this 3-bedroom, 1-bath house, hired the contractors to do the renovation, and then eventually sold it for a profit. When it was all said and done, Doug took 50% of the net profit. It was just a simple real estate joint venture, by the way. They didn't form an LLC. It wasn't a syndication. It was just a simple single-family deal. They sold it. They split the profits 50-50. Doug, investor A, his Roth IRA took 50% of the $68,000 in profit, which turned out to be $34,000. How much do you think he paid in tax on that deal? 0%. The Roth IRA, from my perspective, is the single most powerful financial instrument because the Roth IRA is seeded with after-tax dollars. It grows 100% tax-free as long as you invest the right way and follow the right guidelines. And then when you harvest the crop, when you take money out of the Roth IRA after 59.5, you pay 0% tax. So he'll pay 0% tax on that deal. He's got $47,000 in the Roth IRA, and he started with a rather small balance. Another quick story, 2 clients of mine, Kevin and Cynthia, they're from St. Louis, Missouri. They had $117,000 back in 2011 from old 401ks. They rolled their 401ks over into self-directed IRAs, and then from there they converted those funds into Roth IRAs. It's called a Roth conversion. You can actually go from tax-deferred to a tax-free Roth. Get the taxes out of the way now so you don't have to pay in the much larger crop. Over the last 12 to 13 years, they've done over 20 real estate transactions in those self-directed IRAs. They also do private money lending, and they've grown their Roth IRA balances between the properties that they still have in their accounts, which are 14, and they're doing private money lending. They have a balance of over $2 million in cash and assets. They're actually generating over $200,000, 100% tax-free on an annual basis. They're over 59 and a half. The $215,000 in net tax-free cash flow, they can take out if they want to every single year. And how much do you think they pay in taxes? 0%. The properties that they have in their Roth IRAs, when they sell those properties, there's going to be no long-term capital gains tax and no depreciation recapture. All tax-free in their Roth IRAs. Is that powerful? That's powerful. Now you're probably thinking, why in the world is he telling me this story? Well, sometimes when we're marketing, we have to tell stories like this to get people really excited and give them some education that's not selling them a deal, right? I learned this a long time ago. I was always trying to sell the self-directed IRA in alternative investing, right? Remember I told you that? I learned the lessons the hard way. It doesn't work. What I learned is I have to offer more education that's further up the funnel. And so I'm not saying you have to use this deal or this testimony, but you could use transactions like this. Just like Jacob, I thought he told an amazingly powerful story at the beginning of today about his journey to actually failing at something, and then look at this amazing company that they've built. So sometimes when we're marketing our opportunities and we're trying to penetrate the over $13 trillion in IRAs, we actually have to tell stories like this to get people really excited. We get the dopamine going, we call that, right? And then we go in and we start talking about, hey, if you can't go out and do this yourself, because let's face it, how many people can go out and do this? Not many. I know a lot of you can probably go out and do this, but the investor, the consumer investor, most likely they're not going to be able to do this. But you can help them gain allocations of real estate in their retirement account. A case study that's more relevant to real estate syndications, Brian, he's a college buddy of mine. He's in his early 40s. He's a mechanical engineer. He has an MBA, has done very well for himself in his early career. He had over $200,000 in an old 401k. And he said, I don't want to invest in the stock market anymore. Interesting story. He works for one of the largest financial institutions in the country that does only traditional investing. And he's moving his money to invest in a private, I almost did it again, you guys got to stop me, a private market investment. You'd be surprised actually how many financial advisors and how many licensed professionals allocate their monies to private market deals, not solely to public deals, which is all they can advocate through their company because they're restricted. So he invested $200,000. He bought 200 Class B units in a multifamily real estate deal. This was a fund that owns 3 apartment buildings. Normally you just see 1 apartment building, but it just so happened that this was a deal heavily marketed, by the way, through digital media. So who has seen a lot of folks doing incredibly well marketing through digital means, Facebook, other social means, their deals? This deal was funded 100% through digital marketing. And so he's getting an 8% pref. It's a 506c Reg D offering. He's getting an 8% preferred, and he's getting a 70-30 split, a GP-LP split with a 15% hurdle rate. Obviously, the deal just closed, so these numbers have not come to fruition. Of course, I'm going to leave the name out of it because I don't want to be seen as endorsing or recommending a specific investment. I have no ties to this specific deal sponsor. I'm just showing you an example of an end IRA investor who invested in a deal like this. So his process was he opened up his account, he rolled money over from an old 401k into a self-directed IRA, and then he gave the direction to Equity Trust to send the money out of the account, and now he has 200 Class B units in his equity trust IRA. Now, a couple important points to note here. Your client has to have their account set up and funded well in advance. One of the biggest pitfalls I see in the industry is folks won't have their accounts set up and funded in advance, and they miss out on a deal opportunity. So you want to make sure that you're engaged with that client and with Equity Trust early on so that you don't miss out on an opportunity or create a friction-filled process for your client. It can take anywhere between 2 to 3 weeks to transfer rollover funds from point A to point B. The good news is you don't have to be an expert in that area. Equity Trust will be the expert in that area, and we will help that client through the process. We have an entire team of what we call onboarding specialists that will assist in that endeavor. All right, so that leads me to sort of the historical process of onboarding, and then I'll start to wrap up here. So the historical process of IRA onboarding, and I know it's a little hard to read these slides, you guys will all have a copy of this, is filled with a lot of friction. So it's very costly in many cases in comparison to non-IRA capital raising. In fact, a lot of the deal sponsors that I've worked with historically, they've had 1 or 2 full-time employees that are solely dedicated to the IRA investors and the IRA investor paperwork. Because there's direction of investment forms, there's a different way to fill out a subscription agreement, there's a different tax ID number that's used, your K-1s reporting the income or losses are associated with a different tax ID number. There's additional work that goes into managing IRA investors. And so you have to account for that as a cost to you as an investment sponsor. Lots of manual processing, assisting clients with walking through the funding and rollover process, delays in transferring funds, lack of visibility on status updates and where things are at, no reliable point of contact to oversee things. You call into a call center and hope that you get somebody that's knowledgeable, lack of expertise with IRA and 401k and 403b and other retirement accounts, and of course, lack of marketing collateral and support. And so what we've done here with Sponsor Cloud, when TJ and Jacob came to us and they said, you know, hey, we've solved a lot of problems for deal sponsors over the years. And like Jacob said at the very beginning, you know, these are folks that are in the trenches that are doing deals and that have been doing deals for a lot of years. To me, I really admire that, right? I admire when people are active in the business because I do see a lot of folks out there that just come from the tech space and they don't know anything about real estate. And I know a lot of people that come from the tech space that know nothing about self-directed IRAs and then start a self-directed IRA company. And quite frankly, a lot of them fail. And so between Equity Trust and Sponsor Cloud, we've developed this process. Part of it is, of course, the technology and the integration. But the other part of it is each and every one of you as a deal sponsor is going to have a dedicated relationship manager. So you're going to speak to one person at Equity Trust that services the Sponsor Cloud platform. Her name is Krista Manning. So you can schedule an onboarding call with her and she will help you through the process of getting your deal docs loaded up into our system so that when your investors are ready to place their investment with you, it's a seamless process. We also have tech integration where you can have an open an IRA button on your site. So if you want to drive people down that path, open an account, they can start that process with Equity Trust. We know exactly who they came from. And then we can have our premium onboarding team, a single point of contact, reach out to that person directly and help them through the entire account opening and funding process. So you don't have to get involved and bogged down with where's the money at, is it going to show up, how to set up the account, educating the client on who is Equity Trust, what do we do, is their money safe? We'll do all of that for you. We'll take all that heavy lifting and burden off of you. So each client is going to have a dedicated point of contact. You're going to have a dedicated relationship manager. And the subscription agreement processing and direction of investment form processing is essentially straight through. There are some technology integrations that are coming into play here very soon between Equity Trust and the Sponsor Cloud platform that will even expand this integration and the efficiency of this process. So as you utilize the Sponsor Cloud software and platform, you'll see continual development around these IRA implementations.